It is March 8, 1:09 p.m. Looking at Gap, trading at 11.9, ticker GPS. Today's volatility at 33%. And here are the unusual options that I saw. Here, you'll see here this 12 put and this 11.5 put. Right, 4,798 of them. And then another 4,500, 4,000. These are all the same trade because it's also here. But this one was put at a different time, but it's the same strike prices here. Okay, and so we're going to analyze this and look at what this means. These very unusual options here, which shows up on the options chain. When you look at the March 17th, you'll see there's a total of 9,945 now. So that's at the 12 strike prices. And then the April's 14, here it is, another 9,000 here. You'll see here at that 11.5 puts. So if we analyze this together, here it is. This is it. Let me take that off, put it back on. Here it is. So it looks like they're buying the 11.5 puts in April and then selling the 12 puts in March. That has a higher volatility, taking advantage of the higher volatility to sell put options in the near term and then buying the put options in the longer term. And so the current price right now, they're only paying $3. It's a very small debit, but the buying power is $50 per contract because of the 0.5 width, so $50 per contract. And so if we were to calculate that, about $50, there was about 9,000 contracts. It's about 450,000, $500,000. You'll see here, that's just an estimate because we don't know exactly at what time they put that, or what was their trade, and because there was a couple of other people starting to putting on this trade. So that's an estimate of 9,000 contracts. And so this is a kind of neutral, slightly bullish strategy where the break even is about at 10.9 at expiration on March 17. And here another one, if it does rally up, the break even is at let's see, about 15.9, so it won't break 16. Let's see if it makes sense here. 16 is all the way up here, which makes sense because Gap did make its high back in February 3rd, and so that's why this trade would be profitable even if it drops down to 10.8. Even if it drops down here, it's still profitable. And so that's that. Anywhere around this range where it ends up, it's still going to be a profitable trade. Now keep in mind, there is earnings coming up March 9, tomorrow afternoon. So this is considered an earnings play. They may be putting on this trade just before earnings. Maybe they don't want to put it on tomorrow because it'll be too obvious. But this is quite an earnings trade to take advantage of the volatility. So again, it's taking advantage of that volatility and selling the near term. And this is it will be profitable in this entire range after earnings. So it can drop all the way to 10.8, and that's actually 10.8 is a 9% drop, and it's still profitable. So that's quite an interesting, smart trade. So if you like this video, subscribe and hit the bell notification to get these instant unusual options that I'm going to be reporting on whenever it's detected. Thank you, and happy trading.